If you're just a sole proprietorship, you're paying what's called self-employment tax, which is 15.3%. Let's say you work a 9 to 5, you and your employer are paying that tax, right? So you're paying Social Security, Medicare. So you're paying as an employee 7.65%, your employer is paying 7.65%. But now as a business owner, you are both the employee and the employer. So now you're paying 15.3%. All right, which is okay if you're starting off, but once you start making a lot more money, at least at 40,000, really 50,000, consider switching over to what's called an S corporation, because that's what's going to save you on that self-employment tax. To give you an example, let's say you make $100,000 in your business and that's the profit. You pay 15.3% of that. That's 15,300. Instead, what you can do, switch over to an S corporation. Then you're gonna have to pay yourself a salary, right? So let's say you do 50% on the salary. Instead of paying 15.3, now you're paying like $7,000 on taxes, right? So that's like literally $7,000 savings just by switching over from a sole proprietorship to an S corporation. There's different tax forms you have to go ahead and fill out. You got form 2553 to go ahead and file that. You want to do that within the first 75 days of the year, so March 15th. When you become an S corporation, the LLC, remember, it doesn't help you save money on taxes, it just gives you that protection. Let's say you have two different types of businesses. An accounting firm, let's say I have Airbnb, right? I need to have a separate LLC for those two. Both those businesses have different risks, right? In the Airbnb, someone could slip and fall, try to come after me. In the tax business, they could try to say malpractice or whatever the case, whatever the different risks could be in that category. So you want to have it separate.